Yes, sir. Good evening. We are going to start the session. So, just confirm me that my voice is audible and the PowerPoint presentation, that is the PDF file, is visible to all of you so that we can start the session and start the topic. I am waiting for your replies. Please comment in chat box so that we can start our discussion. Okay, sir. One comment from one side. So, most probably voice is okay. Okay, sir. So, today we are going to start our discussion on a very important topic under GST. Okay, sir. Yesterday in our last session, we had discussed about the input tax credit, that is section 16, subsection 1, to claim the input tax credit in the course of furtherance of business. Okay. And we had also discussed on section 16, subsection 2, various conditions to claim the input tax credit. Section 16, subsection 3 talks about the depreciation wala part. Section 16, subsection 4 talks about the timeline to claim the input tax credit. Okay, sir. Now, we are going to start our discussion on section 17 subsection 5. Section 17 subsection 1, 2, 3, 4 we will discuss later on after the discussion of section 17 subsection 5. Sir, blocked credit, what do you mean by blocked credit? So sir, blocked credit means the credit on which input tax credit is not allowed. Okay, sir, the credit which is not allowed to you, sir. Now we want to revise, we want to learn the credit which is blocked under GST. So section 17 subsection 5 clause number 1 talks about the input tax credit related to motor vehicles. Sir, related to motor vehicles, if you are going to buy a motor vehicle, in that case input tax credit related to that motor vehicle will not be allowed to you. But if you are going to use that motor vehicle for further supply, that means you have an agency and you are buying certain motor vehicles and you are going to selling those motor vehicles to other person, in that case input tax credit is allowed. Okay, sir. Next, if you are in the business of transportation of passenger, in that case input tax credit for that motor vehicle is allowed, but the capacity should be more than 13 passengers. Okay, 13 पैसेंजर से ज्यादा यहाँ पर कैपेसिटी होनी चाहिए. If the capacity is not more than 13 persons, in that case you are not eligible to take the input tax credit on those vehicles. Or if you are going to buy the motor vehicles for training purposes, that means you are an owner of a motor training schools, or you bought those product for training to other person, in that case you are going to use that motor vehicle in the course of furtherance of business, or your business is only due to that motor vehicles, hence you are eligible to take the input tax credit. That means, sir, section 17 subsection 5, please prepare the notes with the session itself, so that will be more useful for us in our day-to-day life, in our day-to-day practice. So sir, as per section 17 subsection 5 clause number a, in case of motor vehicles input tax credit is not available. But if you are going to use the same for further supply, in that case input is allowed. If you are going to use in the case of transportation of passenger and the capacity is more than 13 passenger, in that case input is allowed. Or if you are using the same for training purposes, in that case input is allowed. बाकी input आपको उसके मिलने वाली नहीं है. You will not be eligible to take the input. This is the scenario. Okay, sir. Now, vessels and aircraft, if you are going to buy any vessel and aircraft, in that case input tax credit related to that vessel and aircraft is also not available to you. You are not eligible to claim that input tax credit. But you are eligible to take the input tax credit for that vessel and aircraft if you are going to use that vessel and aircraft for further supply. I am an aircraft company, I am an aircraft manufacturer company, okay, or I am manufacturing the aircraft and I am selling the same to Air India or Indigo or Vistara. In that case, I am using the product for further supply. In that case, input tax credit is allowed. If airline company is going to use that aircraft for transportation of passenger, in that case, input tax credit is eligible. If in vessel you are going to use those vessels for transportation of passenger, in that case input tax credit is allowed. Or if you are going to use that aircraft and vessel for training purposes, that means you are a training company or you are going to use that vessel for training purposes, in that case input tax credit is allowed. Sir, Why this concept? Government says in case of motor vehicles, aircraft, vessels, input is not allowed. But if your business is only due to these vehicles, these vessels, these aircraft, in that case input is allowed. Okay, I am a regular taxable person and I bought a car. In that case, I am not eligible to take the input tax credit on that car because my business is only not only due to that car. ठीक है. So government has make the concept, this is just for concept clearance purposes. Okay, or on those vehicles, motor vehicles, aircraft, vessels, you are not going to claim the input tax credit. So for their repair, maintenance, journal insurance, you are also not eligible to take the input tax credit. So that when we are going to file our GSTR 9 or 9C, or when we are checking or auditing the books of accounts, in case we first check that taxpayer has not claimed the mm, input tax credit of insurance, journal insurance, or the input tax credit of repair and maintenance of the vehicles. So that is what is the basic logic. But if you are going to use that vehicle, that aircraft, that vessel for training purposes or for transportation of passenger or for further supply, in that case, if you use or if you taken the insurance, in that case input is allowed for insurance, or you had done the repair and maintenance, in that case also input is allowed. That means, sir, what do you mean? That means, sir, in case of motor vehicle, in case of vessel, or in case of aircraft, input is not allowed. But if you are going to use that for transportation of passenger, okay, or if you are going to use for further supply, or for training purposes, in that case input is allowed. Okay, that is what is the concept. In that case input is allowed. Normally insurance, repair, maintenance is not allowed, but you are using for these specified purposes, in that case repair, maintenance and journal insurance ki input be you are eligible to claim. Okay sir. Now explanation: if I bought a vehicle, I am an agent and I have a agency on which on that behalf I am going to sell the vehicles. In that case, if I bought certain vehicles for display purposes, in that case that input tax credit shall be allowed it. Okay, next, if company provides vehicles to others on lease, I am doing the business to provide the vehicles on lease to others. In that case, the vehicles are used in my business and my business is completely due to that leasing. In that case input tax credit on those vehicles is allowed. Okay, in case the vehicle is used for transportation of cash only, in that case cash is in the definition of money and money is not goods, hence no supply, hence no input tax credit is used if you bought a vehicle for only for purpose to carry the cash. Okay sir. Now, the following supply of goods or services or both, that means food and beverages, outdoor catering, beauty treatment, health services, cosmetic, plastic surgery, leasing, renting, hiring of motor vehicles, vessels, aircraft. In that case, the input tax credit related to those particulars are not allowed. That means if someone is providing the beauty treatment services, in that case the input tax credit is not allowed. But if someone is involved in selling the beauty treatment products, in that case input is allowed. That means, what is the meaning? Input tax credit shall be available where an inward supply of such goods or services both is used by a registered person for making an outward taxable supply. In that case input is allowed. That means, सर इसको लॉजिक से समझते हैं. व्हाट इज द लॉजिक बिहाइंड दिस? इफ यू आर गोइंग टू पे आउटपुट टैक्स टू द गवर्नमेंट, इन दैट केस इनपुट इज अलाउड इट. If you are not going to pay the output tax, in that case input is not allowed it. That is what is the concept. Membership of a club, health and fitness center. Sir, another point is also that these all services, you are going to provide to an unregistered person. Maximum cases you are going to provide to an unregistered person. So government says that the input tax credit related to those services in the blocked credit as per section 17 subsection 5. Just for logic purpose, memorizing the concepts, I had taken this concept. Membership of club, health and fitness center. If you are going to take a membership of any club, health care center, in that case, that input tax credit is blocked under section 17 subsection 5. Or travel benefits extended to employees on such vacation as leave or home travel concessions. That means if any company is provided any LTA to any employee, in that case input on that LTA is not allowed to any company. Next important part, if any expenditure is obligatory on any company, that company has to provide that services or company has to make that expenditure under any law. In that case input tax credit related to those expenditure is allowed. That means outdoor catering services blocked under section 17 subsection 5. But as per factories act, if the number of employees got exceeded 250, in that case factory needs to maintain the canteen services, so that if your number of employees got exceeded to 250 or more than 250, in that case if you are going to maintain the canteen and canteen is obligatory under the factories act, so input tax credit related to that canteen expenses shall be allowed to the company. That is what is the proviso says. So proviso plays a very important role. The same has been here. Okay sir. So still, we had discussed that motor vehicles, aircraft, and vessel input tax credit is not allowed. Food, beverages, healthcare, beauty treatment input tax credit is blocked under section 17, subsection 5. But if we are going to use the same in further supply, in that case, input is allowed. Sir, concept is okay. The same example is here. Okay. In case of works contract services when supplied for construction of an immobile property, except where it is an input supply for further supply of works contractor. Sir, समझ नहीं आया? If a works contractor provided any services of construction, that means I want to construct a building, and for that purpose I have connected with a contractor. Okay, in that case, if that contractor is going to provide me the works contract services for constructing my building, and for that construction, if that contractor is going to buy certain things, in that case, the input tax credit on those goods or services which is taken by that works contractor is allowed to that works contract, because he is doing the further supply of those goods or services. But if I am going to construct my building on my account, in that case I am not eligible to take the input tax credit. Okay sir, there is two concept. If works contract is going to use those input or input services for further supply, input is allowed. If I am going to use that product or services, in that case not allowed. But on account of plant and machinery, input tax credit is allowed. Can we avail ITC on buses hired for employees to communicate to offices? So the buses, the providing the transportation facility is not mandatory under any act. So this is not an obligatory service provided by an employer to an employee, and this is not covered under transportation of passenger. So in that case, input tax credit is not allowed. Okay, because the term says in case of motor vehicles, read the law, transportation of passenger, but this is not a transportation of passenger. Your company is providing these services to your employees only, so input tax credit is not allowed, or this service is not mandatory under any law, hence the input tax credit is not allowed. The input is blocked under section 17 subsection 5. One may argue, sir, these services are in the course or furtherance of my business. But no, sir. Government says that this is a part to run your business. Only your business is not running only due to these services. Hence, input is blocked under section 17, subsection 5. Is that okay? So, ITC on plant and machinery is allowed. ITC on plant and machinery is allowed. But if repair and renovation is not capitalized in the books of accounts, then ITC shall be allowed. That means, sir, that means ITC दो नेचर हो गए, वन इज कैपिटल एक्सपेंडिचर और वन इज रेवेन्यू एक्सपेंडिचर. If there is capital expenditure, in that case input is not allowed. But if there is a revenue expenditure, input is allowed. So this is all depend on your argument. This is all depend on the arguments of the consultant, of the chartered accountant, of the advocate, that at that time how he can prove that particular expenditure is a capital expenditure or particular expenditure is a revenue expenditure. If he proved that the particular expenditure is a revenue expenditure, input is allowed. And if he proved that if department has proved that the particular expenditure is a capital expenditure, in that case input is not allowed. Shed to protect plant and machinery or civil structure, hence ITC not allowed it, double AR authority Andhra Pradesh. So यहाँ पर हुआ क्या, the the applicant has not presented his case in a well manner, because in my opinion, input tax credit related to shed is allowed, because shed is a part of plant and machinery. Okay, and due to input tax credit related to plant and machinery is allowed, so the input tax credit related to shed should be allowed. It and shed is also movable. I can transfer that shed from one place to another place very easily. There is no loss. Okay, so in that case, input should be allowed as per my opinion. But in case of lift which is installed in building is a part of immovable property, because this is an internal fitting. Various pistons are there for internal fitting or external fitting. If you are going to fit your electricity as an internal fitting, input tax credit is not allowed, because department has considered the same as a part of immovable property. But if there is an external fitting of electricity, in that case input is allowed, because this is an external fitting, not a part of your immovable property. This is also a very basic judgment. If you are going to purchase material on your own account, construction input is not allowed. This is a basic concept. If anyone providing services of renting of immobile property, that means I have constructed one building and I am going to give that building on rent. In that case, input tax credit on that construction is allowed, because on rent income I need to pay the tax. So this is the basic concept where you are going to pay the output tax. In that case, you are eligible to take the input tax credit. Goods or services are both received by a taxable person for construction of an immovable property on his own account, including when such goods or services both are used in the course or furtherance of business. I argue that I am going to construct that building and I am going to use that building in my building purpose only, my business purpose only. That means in the course or furtherance of business. फिर भी I am not eligible to claim that input tax credit, because the same has been blocked under section 17 subsection 5. Sir, what is the reason behind this? Government says that seamless flow of credit. Is it seamless flow of credit? No. Is it not a seamless flow of credit? But this is a situation. The same has been mentioned under section 17, subsection 5. So we have to follow. If I am going to pay tax under composition taxable scheme. That means my turnover is below 1.5 CR. In that case, I have to pay the tax. I may pay the tax under composition taxable scheme. That means in that case, I am going to pay tax at a concessional rate. Hence, I will not be eligible to take the input tax credit. If I am going to use any goods for my personal consumption, in that case, input is not allowed. I bought one fridge for my personal consumption. In that case, I am not eligible to take the input for my business purpose. But that fridge has completely used in my business purpose. In that case, input is allowed. If any goods lost, stolen, destroyed, written off, in that case, input tax credit related to that product is not allowed. Sir, what is the reason? The reason is same. On that lost product, you are not going to pay the output tax. Hence, you are not eligible to claim the input tax credit. Okay, sir. And if you are going to pay any tax due to any demand by the departmental authority under section 74, 129, 130, okay, if departmental authority has given you notice that the particular demand is pending and at your end, and you should pay that demand. In that case, if you are going to pay that demand, there is no input tax credit is available. Sir, is that okay? Section 17, subsection 5. Motor vehicles input not allowed. Vessels, aircraft input not allowed, but used for further supply or for training purposes or for transportation of passenger, input is allowed. Food, beverage, healthcare, beauty treatment input is not allowed, but obligatory under any law. In that case, input is allowed. Works contract input is not allowed, but in case of plant and machinery, input is allowed. Works contract in the nature of revenue, input is allowed, but in nature of capital, input is not allowed. If you are going to pay the tax under composition taxable person, input is not allowed. Personal consumption, input is not allowed. Lost, destroyed, written off, input is not allowed. Sir, okay. Gift distributed, we had already taken that example. Okay, gift distributed between consumer for target based sales, then ITC shall not be allowed it. Okay, next, CSR expenditure, sir. This is an important aspect from budget 2023 perspective on law. Also, sir, CSR expenditure, that is corporate social responsibility expenditure. In case of companies, if the turnover got exceeded by a specified limit, in that case, company has to expend certain amount on CSR activities of their net profit. Okay, so this is obligatory under Companies Act 2013. Hence, companies are going to make that expense. But GST department says the input is not allowed at that expenditure. But under service tax, one decision are there, and as per that decision, ITC is allowed on CSR expenditure, and before 31st March 2023, everyone is going to take the input on that expenditure on behalf of that decision. But in budget 2023, Government of India, Ministry of Finance proposes one amendment in section 17 subsection 5 and inserted one new clause and said that ITC on the expenditure related to CSR expenditure is not allowed. So now the same has been prescribed under section 17 subsection 5. So ITC is not allowed it because section says this is a proposal amendment applicable from 1st April 2023. Okay, sir. Decision is this for CSR activities. Here the decision is mentioned. You can go through with that decision from 1st April 2024. Government has decided to not provide the ITC on the CSR expenditure. Okay, sir. Furniture, if you purchased for movable, in that case, input is allowed. Now, resort. If someone has uh, taken a land on lease for building a resort, okay, in that case, input is not allowed in a pre-operating period. On post-operating period, input is allowed. You got my point. Pre-operating period and post-operating period. When the resort will in operation, in that case, input is allowed on that lease rent. But in pre-operating period, because resort is not in operation, government is not getting any output tax, hence input tax credit on pre-operating period is not allowed. The same decision is provided by AAR authority, West Bengal. Sir, is that okay? Any residential property provided by the company to their employees on their repair renovation, input tax credit is not allowed. Okay, sir. The same decision is provided by AAR authority, Odisha. Most probably each and everything is clear in your mind regarding section 17 subsection 5 blocked credit on which input tax credit is not allowed. ITC on free of cost supply, that is under warranty period. That means on warranty services, if you are going to provide any free product, that means just take an example. I had sell one AC to any person, okay, and in warranty period if any part got defected, in that case I need to change that product. In that case, if I am going to provide that product and on that product I am not going to pay the output tax to the government, hence on that product I am not eligible to take the input tax credit also. This is also provision, a specific provision in case of warranty. Okay, now I am going to explain section 18 on this notes. If you have any query, you may raise the query in the chat box. Section 18, credit special circumstances, very important point. Okay, there are four situations. I am going to discuss one by one. Section 18 of CGST Act. We had already discussed section 17, subsection 5. Discuss on section 17, 1, 2, 3, 4 in letter state. Could you please explain capital expenditure related machinery? If you have any expenditure on account of plant and machinery, in that case, input is allowed. Input is allowed. If you want to set up a business and if you want to buy a machinery for your business, in that case, input on account of that plant and machinery is allowed. But on part of building, you are not eligible. Okay, plant and machinery is a exclusion. Rameshji, is that okay? Now, section 18, situation number 1. Just take an example. My turnover is 15 lakh rupees. My turnover is 15 lakh rupees, and as per my state, the taking for registration limit is 20 lakh rupees, and my turnover is 15 lakh rupees on 1st April. That is 1st January 2022. Okay, my turnover is 1st April 2022 on 15 lakh rupees, but on 30th January, my turnover is crossed the limit of 20 lakh rupees. That is, my turnover is 21 lakh rupees. In that case, I will be liable to take the registration under GST. So, suppose on 30th January, my turnover got exceeded the prescribed limit, the specified limit. So, I need to take the registration within 30 days of date of liability. Okay, that means I need to take the registration by 2nd of March. I need to take the registration by 2nd of March. If I had applied for registration on 15th of Feb, that is within the time limit prescribed, in that case, all the stock, whether it is an input or an input service, which is available in my hand on 30th January, that is the date of my liability, I am eligible to take the input tax credit on all the stock. Okay, sir, just I am taking the figures. 30th January, on which liability arises. 30th January, on which my liability arises, the input tax credit, the goods which is in my hand is 15 lakh rupees. Okay. On that goods, let's assume input tax credit is 1 lakh rupees. The input is 1 lakh rupees. In that case, if I am applying for registration on 15th Feb, that is within 30 days, in that case, I will be eligible to take that 1 lakh rupees input tax credit, because now I am going to pay the tax. So I need to take certain ITC. So the ITC on the date of my liability will be eligible for me to taking the input tax credit. Is that okay? Shivananji, building covered for plant and machinery, whether ITC is available? No, sir. If you got covered the plant and machinery from a building, the input is not allowed. It we had taken the same decision in that case. In that case, input regarding the shed is also not allowed by the departmental authority, AAR authority. But as per my opinion, for shed, input is allowed because shed is movable property. But in case of immobile property, input is not allowed because the same as covered in works contract definition. And plant and machinery is a exclusion for the definition of works contract. Now, sir, first situation is okay. In that case, your turnover got exceeded. That was the first situation. Please comment in the chat box that first situation is okay. Now I am taking the second situation. In the second situation, my turnover is below the specified limit. But due to I want to sell interstate or certain other reason, I want to take the registration. That is, in case of voluntary registration, there is no liability on me to take the registration. I am voluntarily take the registration. In that case, the date of grant of registration, whose then at that date, whatever will be the stock available in my hand, I am eligible to take the income tax credit. That means I filed a registration application on 15th Feb and I got the registration on 20th Feb. In that case, voluntary registration, all the stock which is available as on 20th Feb, I will be eligible to take the input tax credit in case of voluntary registration. Sir, is that okay? So section 18 subsection 1 clause number A talks about your the first situation, okay, within 30 days. Second situation registered under section 15, that is voluntary registration, we had already discussed preceding the date of grant of registration. Okay. Then where any registered person ceases to pay tax under composition taxable person, that is I was registered under composition taxable person because my turnover below 1.5 crore or any other reason. Okay. Now I want to take registration as a regular taxable person. In that case, he shall be entitled to take the input tax credit in respect of input held in stock, input contained in semi-finished or finished goods in stock on capital goods of the day immediately preceding the date from which he become to liable to pay the tax under section 9. Okay, sir. That means I was registered under composition taxable person. Okay, on 20th Feb. On 25th Feb, my turnover got exceeded. In that case, I will be liable to pay the tax under regular taxable person. So in case of composition, there is no input tax credit, but in case of regular, I am going to pay tax at a higher rate. So I will be eligible to take the input tax credit also. So now I am eligible to take input tax credit also due to composition to regular. So in that case, all the stock which is available on the date of liability, that is 25th Feb, I will be eligible to take the input tax credit. Sir, is that okay? Next, where an exempt supply of goods or services both by a registered person becomes the taxable supply because government has by notification decided certain supply as a exempted supply, but now government says that the particular supply is your taxable supply. In that case, such person shall be entitled to credit of input tax in respect of input held in input contained in semi-finished or finished goods held in stock related to such exempt supply on capital goods exclusively used for such exempt supply on the day immediately preceding the date on which the supply become taxable. That means, just take an example. One product X is exempt till 20th Feb. On 25th Feb, the same has been notified as a taxable product. Okay, as a taxable product. In that case, the same has been treated as a taxable product. Hence, the all the stock input and input service related to that product as on 25th of Feb, I have this. I am eligible to take the input tax credit on those input and input goods. Sir, we had discussed four situations. In one situation in which my turnover got exceeded the specified limit, so I am going to take the registration. In that case, the date on which I will be liable to pay the tax under GST. Second situation in which I am going to take the registration on the voluntary basis. In that case, I will be eligible to take the input tax credit on the date on which the grant of registration. Third, in case of composition taxable person, date of liability, or in case of exempted to taxable supply, in that case the product is specified as a taxable supply, the date on which the input and input service you held in my stock, I am eligible to take the input tax credit. Is that okay? Now, question arises. Sir, for claiming that input tax credit, I need to file any form? So yes, you need to file a form. You need to file form ITC 01. Okay. So the same has been prescribed here. You need to file form ITC 01 within 30 days from the date of eligibility. And if you are going to transfer or if you are going to take input in excess of 2 lakh rupees, in that case, the form should be certified by a chartered accountant or a cost management accountant. Okay. CMA is also eligible to sign that form. Section 18 subsection 1, subsection 2. Section 18 subsection 2 says, Section 18 subsection 2 says, sir, concept तो clear हो रहा है ना? Your concept is clear. Please once comment in the chat box so that I got assurance that you are getting the points. Section 18 subsection 2 says that, sir, as per section 18 subsection 1, all the stock which is in your hand, you are eligible to take the input tax credit. But here section 18 subsection 2 impose certain time limit. Section 18 subsection 2 says that if in your hand any invoice is available which is 1 year old, in that case for that invoice you are not eligible to take the input tax credit. So the maximum timeline for which you can claim the input tax credit is 1 year. उससे ज्यादा अगर आपके पास में कोई पुरानी invoice है, you have an old invoice, in that case on that invoice you are not eligible to take the input tax credit. Okay, sir. Now, special situation. सर 4 सिचुएशन हम लोगों ने डिस्कस कर ली. अब एक स्पेशल सिचुएशन हम लोग डिस्कस कर रहे हैं इन केस ऑफ सेल. in case of sale, in case of transfer, in case of amalgamation, in case of merger, what is the procedure to transfer the assets? Just take an example. I have an industry that is XYZ limited and I want to demerge that industry into XY limited and Z limited. In that case, all the assets, all the input tax credit which is a hand of XYZ limited, I need to transfer that input tax credit to XY limited and Z limited. In that case, when I want to transfer that input tax credit, then the first question arises, sir, which form I can transfer the input tax credit? So the form is ITC 02. Okay. Now, second question arises. Sir, what is the ratio in which I need to transfer the input tax credit? Because the entity is XYZ limited. Now I going to demerge as XY limited or Z limited. In that case, ratio will be in the ratio of assets. Whatever will be the assets in hand of XY limited and Z limited, in the same ratio, the input tax credit should be transferred via forms ITC 02. In case of amalgamation, sir, in case of amalgamation, there is a two entity XY limited एंड जेड लिमिटेड और इन सबको मर्ज करके अपन बना रहे हैं एक्स वाई जेड लिमिटेड सो इन दैट केस आल्सो द इनपुट टैक्स क्रेडिट ऑफ एक्स वाई लिमिटेड एंड द इनपुट टैक्स क्रेडिट ऑफ जेड लिमिटेड हैज टू बी ट्रांसफर्ड इन एक्स वाई जेड लिमिटेड सो यू नीड टू फाइल फॉर्म ITC 02. Is that okay? So form ITC 01 in case of taking the input tax credit, or if you want to transfer the input tax credit, in that case form ITC 02 you need to file. Is that okay? Next situation. In case death of proprietor, एक बिजनेस है राम एंटरप्राइजेस, एक बिजनेस है राम एंटरप्राइजेस एंड प्रोपराइटर है मिस्टर एक्स. एक्स की यहाँ पे डेथ हो गई एंड ड्यू टू डेथ ऑफ मिस्टर एक्स द बिजनेस ऑफ राम लिमिटेड राम एंटरप्राइजेस हैज टू बी क्लोज्ड. In that case, if the business was continued by Mr. Y, son of Mr. Ram. Okay. Son of Mr. Ram is going to continue the business. In that case, the first requirement is that Mr. Y needs to take a fresh registration because GST and based on PAN and the Ram Enterprises was a proprietorship. In that case, Ram Enterprises needs to be closed due to the death of Mr. X. So Mr. Y needs to take the fresh registration. Then after Ram Enterprises has to file ITC 02 for transferring the input tax credit to Y, and then after transferring of input tax credit, Ram Enterprises has to close his business through cancellation of registration due to death of proprietor. Is that okay? In case of death of proprietor, is that okay? Sir, the same provision is here which we had already discussed. In case of amalgamation, form is ITC 02 and the transfer in the ratio of value of assets. Okay, sir. Procedure in case of death, so the procedure is same, form REG 01 for registration, cancellation and ITC 02. Is that okay, sir? The procedure, amalgamation, merger, demerger, and in case of death of sole proprietor. Now we are going to start our discussion on section 18 subsection 4. Sir, what is section 18 subsection 4? Section 18 subsection 4 talks about, earlier we had discussed that any composition taxable person convert into regular taxable person, or a exempted supply got converted into taxable supply. But section 18 subsection 4 talks about reverse situation. As per section 18 subsection 4, as per section 18 subsection 4, if any taxable supply has transferred, has notified as exempted supply, or if any regular taxable person converted into composition taxable person, in that case, as my product was taxable, I have taken the complete input tax credit. So if the product is converted into exempted, in that case I need to reverse the input tax credit which is in my hand. That is all the input tax credit, all the input and input goods and input services which is in my hand, I need to reverse that input tax credit related to that input and input goods. Or if I was a regular taxable person and I'm going to convert as a composition taxable person. In that case, all the input and input goods which is in my hand, I need to reverse the input tax credit related to those input and input goods. And if also there is any balance in electronic credit ledger after that reversal, I need to lapse that input tax credit also, because now I am completely dealing in the exempted product, or I am completely in a composition taxable person. But if there is a mixed supply, that is, I am going to use exempted as well as taxable. In that case, I need to follow rule number 42 and 43. We will discuss on that rule also. Is that okay, sir? Section 18 subsection 4, the reverse situation of section 18 subsection 1. The amount of credit section 18 subsection 1 and 18(4), that is reversal, shall be calculated as per prescribed, जो कि rule के अंदर बताया गया है. The same has been mentioned in the rule. We had already discussed on that part. Okay, now section 18 subsection 6, in case of supply of capital goods or plant and machinery on which input tax credit has been taken, the registered person shall pay an amount equal to input tax credit taken on the said capital goods or plant and machinery reduced by such percentage points as may be prescribed, or the tax on the transaction value of capital goods and plant and machinery determined under section 15, whichever is higher. Sir, please take an example. So in case sale of capital goods and plant and machinery, in case sale of capital goods and plant and machinery, just take an example. On 1st April 2022, I bought a plant and machinery for 1 lakh rupees. Before that, just uh, take this thing, that under GST law, government treats that life of an capital assets is 60 months. Hence, government says related to capital goods, if you are going to use that capital goods in exempted as well as taxable purposes, or you need to reverse the input tax credit 5% per quarter, because the life is 60 months. Okay, this is an assumption, this is a rule which is given by government, that is 5%. Okay, we can't change this thing. So this is just for your knowledge, and this is also usable in our calculation purpose. So I bought a plant and machinery for 1 lakh rupees on 1st 4 2022, and on 30th 9 2022 I am going to sell that plant and machinery. Okay, I am going to sell that plant and machinery. In that case, time period is 2 quarter. So 5% each quarter, so that is 10% for 2 quarters. So the amount is 10,000 rupees. Okay, so 10,000 rupees, or suppose I am going to sell that product at 50,000 rupees and the tax rate is 10%. In that case, tax amount comes 5,000 rupees. So government says that the amount of reduction or the tax payable on the transaction value, whichever is higher, you need to pay the same to the government. The same line is prescribed under section 18 subsection 6. Most probably example clear ho gaya hoga. In case of supply of plant and machinery or capital goods, you need to calculate the figures as per this one. Okay, rule 41A. Sir, what about rule 41A? I am going to take each and every situation in our today's session as a practical situation. Rule number 41A, that I have a GSTN in Rajasthan. Okay, in Jodhpur. I have situated one more office in Rajasthan, in Jaipur. हाँ, ठीक है. And now there is a balance of input tax credit of 1 lakh rupees. And if I want to transfer 50,000 rupees ITC from Jodhpur to Jaipur, GSTN, because the Jaipur business is my new business, and there is a requirement of input tax credit. So what is the procedure? So for that purpose, government has come with the rule number 41A, and as per rule number 41A, you can transfer that input tax credit to form ITC 02A. You need to file form ITC 02A on your GSTN portal, okay, by using the user services, and you are going to transfer that input tax credit from Jodhpur to Jaipur. Okay, but when you are going to transfer the credit from Jodhpur to Jaipur, then Jaipur premises has to maintain proper accounts for that purposes. Okay, आप ट्रांसफर कर दोगे, एक बार में ट्रांसफर हो जाएगा, नॉट इश्यू विद द ट्रांसफर, बट एट द टाइम ऑफ डिपार्टमेंटल ऑडिट, एट द टाइम ऑफ litigation, they will check each and every point. So if you are going to transfer any input tax credit under rule 41A, in that case you need to make the proper accounting. Also, if you are going to transfer the same from Jodhpur to Jaipur, the input has to be accepted by the Jaipur branch on their GSTN portal. So you need to file ITC 02A on your GSTN portal, and Jaipur branch has to accept the input tax credit through form through form GST ITC 02A, and the proper accounting should be maintained by the Jaipur branch in their books of accounts. That is what is the procedure which is mentioned in rule number 41A. Sir, is that okay? Now, there is rule number 40, which is talks about the manner of claiming input tax credit in special circumstances. We had already discussed that point, because we had discussed at the time when I am going to take the new registration, or I am going to take the input tax credit on account of voluntary or composition to regular person or exempted to taxable person, I need to file form ITC 01 within 30 days, and if the amount is exceeding 2 lakh rupees, in that case CA certificate or CMA certificate is required. The same has been prescribed under rule number 18. Rule number 40 regarding section number 18. Is that okay, sir? Now, input service distributor. Sir, everything is okay now? Once comment in the chat box so that we can take the next topic. I am waiting for your replies. Everything is okay now? For the complete concept of input service distributor, I am just taking one example, and from that example, I am going to clear the law part as well as the practical part. Okay. So, my head office is situated in Rajasthan. Okay. My head office is in Rajasthan, and I have multiple branches in Gujarat, in Maharashtra, in South. Okay. I have multiple branches, and I am doing the business of I am doing the centralized buying. Just take an example. There is a requirement of 30,000 laptops. 30,000 laptops की यहाँ पर requirement है. There is requirement of 30,000 laptop, and I want to buy that laptop. So I had done the centralized buying. Okay. So for those 30,000 laptop, I need to expend 3 CR rupees, 3 crore. Okay. So for that purpose, I have connected with a contractor, and I have taken 30,000 laptops from that contractor. Okay. And that contractor has done the billing with my Rajasthan GSTN. And I am going to transfer those 30,000 laptops to my various branches. Is in Gujarat. That is 10,000 I am sending there. 10,000 I am sending there. 10,000 I am sending there. In that case, the product are not used by me. I am going to transfer those products to various branches. In that case, I need to also transfer the input tax credit related to those laptops to my branches, Gujarat, Maharashtra or South. And now, In that case, if I want to transfer the input tax credit, I need to take the registration as a input service distributor ISD. And after taking the registration as a ISD, I can transfer the input tax credit of my head office, that is centralized buying, to my various branches. Okay, now sir, आपने बोल दिया सर ट्रांसफर करना है, we have to transfer from head office to the branches, then sir what will be the ratio? So ratio will be the based on your turnover. Ratio will be based on the turnover. Okay, suppose the total turnover of my branches is 30 cr. Just for easy calculation, I am taking this example. The ratio will be based on your turnover only. The total turnover is 30 cr. Total turnover is 30 cr, and per branch turnover is 10 cr, 10 cr, 10 cr. In that case, the ratio will be, the distribution of input tax credit will be 10 divided by 30 multiplied by whatever will be your figure of input tax credit. Just take an example of 30 lakh. If the input tax credit is 30 lakh, in that case whatever amount will become, that will be the input tax credit transferred to branches. Is that okay, sir? Head office in Rajasthan, head office in Rajasthan, and there is multiple branches in Gujarat, Maharashtra, and South. And if head office is done the centralized buying, and head office wants to transfer the input tax credit with the transfer of products, in that case head office need to take the registration as an input service distributor. Okay, sir. And head office has to transfer the input in the ratio of turnover. अब turnover कौन सा लेंगे, for which period we need to take the turnover? So if I want to transfer the input tax credit in during financial year 2023, in that case I need to take the turnover of 21-22. That means I need to take the turnover of preceding financial year. I need to take the turnover of preceding financial year. But if there is no turnover in preceding financial year, in that case the last quarter in which turnover exists, I need to take that turnover. Is that okay, sir? This is very common example. This is very general example. Now, sir, one more situation. 3 branches XYZ in different states. Okay. In X, I need to transfer an input of rupees 10,000. But by mistake, I had transferred an input of 11,000 rupees. In that case, input service distributor has to issue the credit note. Okay, and via that credit note, input service distributor can reduce the transferred input tax credit 1,000. Okay, next situation. I want to transfer the input tax credit of 10,000 rupees to my buy branch, but by mistake I had transferred only 9,000. In that case, input service distributor has to issue debit note for the same, and the balance input can be transferred through debit note. Is that okay? Now, suppose input tax credit is available which HO is 1 lakh rupees. In that case, HO cannot transfer 1 lakh 10,000. So transferred input cannot be in excess of the input available in the hand of head office. Okay, sir. So next, if input service distributor has to transfer 10,000, but by mistake he has transferred 11,000. In that case, he has to issue the credit note, but he has not issued the credit note till the timeline of section 16 subsection 4. We had already discussed on that timeline. In that case, the proceeding under section 73, 74 will start, and head office has to pay interest penalty at the rate of 10%, 15%, 25%, 50%, whatever will be applicable as per the provision of law. That is what is the concept of input service distributor. Sir, we had discussed each and everything related to input service distributor. We had discussed credit distributed cannot be more than the credit available. Particular recipient, तो उस recipient को ही यहाँ पर input tax credit transfer होगी. Okay, sir. Relevant period we had already discussed preceding financial year. If there is no preceding financial year, then we need to take the last quarter. Same pen होना चाहिए under same ISD, because GSTN will be different, but pen should be the same. Okay. Manner of recovery of credit in excess distributed, then section 73 and 74 will be applicable. Procedure for distributor we have already discussed. Our input service distributor has to file form GSTR 6 for that purpose, and the ratio is here. turnover of particular branch divided by total turnover multiplied by credit, then the amount comes to the input tax credit transferred to a particular branch. Okay, now if the head office, that is IST, and the branch is in same state, in that case CGST and SGST has to be transferred. Or if the head office and branch is in different state, in that case IGST has to be transferred. This is a very specific issue. We need to be very much careful because maximum of the mistakes are there in transferring the input tax credit, so we need to be very much careful for that purpose. Okay sir. GSTR6 form has to be filed for distribution. Okay, we had already discussed. Now input tax credit, if you want to reduce, then in that case you need to issue the credit note, or if you want to increase you need to issue the debit note, and form GSTR6 has to be filed by the input service distributor. That is what is the concept of input service distributor. Is that okay sir? Most probably each and everything is okay. Now section 17 subsection 1 2 3 4, because section 17 subsection 5 we had already discussed. Now we want to discuss, we want to come on the section 17 subsection 1 2 3 4. Section 17 subsection 1 says about where someone is dealing in the someone is buying certain product and using the same in the course or furtherance of business for business purposes as well as for personal purposes. In that case he is eligible to take the input tax credit related to business purpose only. That means if I bought certain product for 1 lakh rupees and I am using 50,000 for my business purpose and 50,000 for my personal purpose, in that case the input related to business purpose I am eligible to take input for that purpose only. Okay, section 17 subsection 2 talks about if someone is dealing in exempted supply as well as taxable supply, and if he is going to buy certain product and using both the supply, in that case bifurcation should be done for the exempted supply and for the taxable supply. And if the input is related to taxable supply, the someone is eligible to take the input tax credit. Section 17 subsection 3 talks about that your exempt supply includes the tax on which recipient is going to pay the tax, the supply on which recipient is going to tax, that is the RCM money supply. We had already discussed the particular services or particular goods, the legal services, the cashew nuts, the tendu leaves. We had already discussed on that. Okay sir. Now section 17 subsection 4 specific section 17 subsection 4 specific section in case of finance company or in case of NBFC applicable. This section is specifically for financial company or for non-banking financial institution. So in case of financial company or in case of non-banking financial company, there are two options available in hand of those institutions. One, they can claim the input tax credit as per normal procedure. Sir, what is the normal procedure? So they can take the input tax credit as per GSTR to be considering the blocked credit under section 17 subsection 5. Also, if there is any any input which is exclusively related to non-business purpose, then exclude that input tax credit. If any input is exclusively related for exempted supply, then exclude that input tax credit. Or then after, if there is any common credit, that means any credit which is commonly used for exempted as well as taxable supply or non-business as well as personal purpose, in that case they need to bifurcate those input tax credit, and those input tax credit which is related to business purpose only or which is related to taxable supply only, they need to take the input tax credit for that part, and the balance input should be reduced from DRC 03. Okay sir, that is what is the normal mechanism. Now we had already discussed on that mechanism at the time of beginning of the session of input tax credit. The second option is optional. In that case, nothing to be done. 50% of their input tax credit, eligible input tax credit, they can claim. There is no requirement for rule 42 43, that is if there is any product which is used in exempted as well as taxable, in that case bifurcation is not required. To you directly claim the input tax credit of your GSTR to the input 50%. Okay, so these are the option which is available in case of financial company or non-banking financial company, but you need to select the option in beginning of the financial year. Okay, and once you selected the option, you cannot change the option during the financial year. You need to select that option for full financial year only. Sir, now if bank has selected that 50% wala option, then what is the procedure? Normal procedure we had discussed. Sir, what is the procedure in case of 50%? So the input which is available in your GSTR to be returned, just take 10,000 is your input which is available in your GSTR to be returned. Okay. Now you just need to less the input which is related to your blocked credit under section 17(5) because that is your ineligible input. Just take an example that input is 1,000 rupees. Next, 1,000 rupees which is exclusively for your non-business purpose. You need to reverse that input tax credit and balance, that is 8,000 rupees multiplied by 50%, that is 4,000 rupees is your input tax credit which is available in your optional scheme. Or if you follow the normal procedure, in that case you need to do this also. After that 8,000 you need to calculate the common credit, that is from that 8,000 आप बोलते हैं, one can say that 4,000 is completely for taxable person and taxable supply, and 4,000 for exempted as well as taxable and non-business as well as business purpose. In that case your 4,000 will be your common credit, and from that common credit you need to bifurcate 2,000 2,000 or whatever will be the ratio we'll discuss while discussing on rule number 42 of CGST rules. So these are the two options which is available in hand of non-banking financial company or financial company. Is that okay, sir? Shall not withdraw during the remaining year. Okay, shall not avail the credit of non-business purpose and section 17. बाकी remaining जो भी input tax credit है, remains input tax credit, you should do the 50% of that input tax credit and you can claim the input tax credit. Is that okay, sir? Section 17 subsection 5, that is section 17 subsection 4 is okay. Just confirm me in the chat box so that we can conclude our today's session and we will start our discussion on rule number 42 and 43 in our tomorrow's session. The most important rule, rule number 42 and 43. Sir, so if you have any query, you may raise in the chat box or in the WhatsApp group. We may solve your queries, not an issue. And today we had discussed on section number 17 subsection 1 2 3 4. Okay, sir. And also we had discussed on section 17 subsection 5, that is blocked credit under GST. Also we had discussed on section number 18 of the GST Act, that is credit in special circumstances. In case of I am going for a registration, the date of liability, if I had applied within 30 days, in that case I will be eligible to take input tax credit. Voluntary registration, date of grant of registration, the composition taxable person to regular taxable person, the date of liability, and taxable to exempted to taxable, in that case also date of liability, you are taking the input tax credit notice issued. Okay, sir. Also we had discussed the transfer of input tax credit in case of amalgamation, merger, demerger. Okay, ITC-02 form has to be filed. If I have a business in Rajasthan and I want to transfer that input tax credit from Rajasthan to my another entity situated in Rajasthan only, in that case I need to file form ITC-02A, special situation, rule number 41A, sir. We had already discussed. Also we had discussed the concept of input service distributor. The head office has to transfer the input tax credit. If he is going to transfer the product, then he has to transfer the input tax credit. The ratio will be the ratio in the turnover ratio. If in the preceding financial year turnover is available, in that case ratio will be on the basis of the turnover. If there is no turnover available in the preceding financial year, in that case ratio will be your last quarter in which turnover is available. Okay, sir. If wrongly transferred excess input, in this case credit note should be issued by input service distributor, or if the input tax credit is transferred less, in that case debit note has to be issued. And this is our the concept of revision of our today's session. So sir, if you have no query, then I am going to log off for today. We will meet on tomorrow by 7 p.m. sharp. So thank you. Stay connected for more updates and good night.